All right, so let's bring another voice into this market. That is Mike Schumacher, Wells Fargo Securities, head of macro strategy. Mike, good to see you.
Thanks, Brian.
Perfect night. I mean, what a day. Let's start with bond yields. Chris mentioned them. Okay, markets ripped higher. Oil sank 15%, but to Guy's point, still has a $95 price range. 10-year yield didn't move that much.
No.
Down less than 5 basis points. What do you make of that?
It's interesting, right? You got to disconnect. So as Chris just said, stocks have recouped, what, 2/3 of their losses, something like that? In bond land, it's maybe 1/3. In oil, it's 1/3. Something's not right there. And I would say in volatility space, it's maybe 3/4. So
what do you think is then not right?
It seems to me people are sounding the all clear a little bit too quickly. I'm the bond guy. I'm supposed to be depressing. I'm supposed to say that kind of thing. But nonetheless,
Check.
If you look at exactly, got them all, right? So you think about the market backdrop, I would say it's become a little bit too sanguine, a little bit too quickly. So it strikes me you ought to have higher prices for insurance, people waiting a little bit longer for the market to price, some Fed easing, maybe a little bit less hiking by the ECB, that kind of thing.
But the Fed said the opposite today. We got their minutes, so it's 3 weeks old. So burn the book if you want. But in that 3-week-old statement, they did reference hiking if inflation is not sort of fixed. Inflation has got to be higher now than it was 3 weeks ago when they wrote that.
Yeah.
Are we going to get a rate hike?
No, that seems incredibly unlikely. And the Fed speaks very opaquely. So the Fed said many people potentially could advocate a hike if certain conditions are met. It said most people, actually, which is more than many, the way the Fed thinks about the world, could contemplate a rate cut down the road. So the Fed actually, I thought, leaned dovish, not hawkish.
Yeah, I did too. I thought it was dovish Fed minutes, which I think give you a little eye into all the fear of this emergency hike we were going to get. And I would get back to where is Fed policy right now? I mean, where are we really, Michael? Given we've got a big CPI coming out on Friday, we've had inflation in every other number. But I heard a Fed that if they're pushed here, it's still the job market that's number one in that weakness.
Yeah, they're really concerned about that for sure. And that's gotten weaker if you look at some of these, call it secondary ancillary indices like the quits rate, et cetera, not doing terribly well. I take your point, Tim. I think that's right.
So, Mike, when you look at a misery-like index, you look at gasoline prices, we're heading into midterm elections. So you have gasoline prices and you have mortgage rates, both elevated. What can this administration do, or what do you look at in the market as the next domino? We could talk about the 10-year. But what's the effect on the mortgage rate? That's when you really get lifeblood into the economy.
Yeah, mortgage rate, that's a great question, Steve. You think about the mortgage rate and how it's gone elevated over the last, call it 4 to 5 months. You could maybe have the Fed come in and talk about doing an Operation Twist. Sounds really unlikely for a lot of reasons. Number one is the Fed sort of uncomfortable with balance sheet changes right now anyway. It's buying Treasury bills, doesn't want to buy the long end. Secondly, a new Fed chair comes in probably next month. Maybe it's pushed back, but pretty soon, so that transition's tough. If Trump and Secretary Bessent want to do something very different, we've talked about this a bit, I've mentioned in this show, they could conceivably change the issuance, not schedule, but volumes of 10-year, 20-year, 30-year debt, say, we'll issue just a little bit less of that long-term stuff, a little bit more in Treasury bills. That buys them some time. Maybe it's worth 20, 25 basis points. Is it 50? I don't think so. So that, to me, is something that could be done, but it's not a long-term